Welcome, everyone. My name is Akshat, and I will be your moderator tonight. Join Jim Brady, Senior Director of Henry Schein Financial Services, and Joe Paul, Southwest Regional Manager, on this exciting webinar where you learn how to build a business plan that optimizes funding for a practice expansion or practice build-out. If at any point you have a question, please type it into the box labeled "Have a Question," and we will conduct a live Q&A at the end of the webinar. To talk with other attendees, navigate to your control panel at the bottom of your screen and click the chat icon. Henry Schein is not offering CE credit for viewing or attending this presentation live or on demand. Jim and Joe, welcome.
Fantastic. Thanks, everyone. Thank you, Akshat, for introducing us here, and thanks, everyone, for joining on this lovely evening. So as Akshat mentioned, I'm Jim Brady. I'm the Senior Director of Sales for Henry Schein Financial Services. Quick background on me. I've had the pleasure of being in the dental practice finance industry for over 15 years now at several large banks and financial institutions, and now Henry Schein. I live in Charlestown, Massachusetts, in downtown Boston, with my wife and 14-month-old son, James. I'm very excited to be here tonight. I'm joined tonight by Joe Paul, one of the regional managers here at Henry Schein Financial Services. We've got a packed agenda tonight, so I'm going to jump right into it. So why don't we advance the slides here? So there's myself and Joe. So why are we here tonight? Let's talk through some of the learning objectives. So overall, we want you to have to walk away tonight understanding the impact that a well-thought-out business plan can have to your success, not only in general, but also, as the title of the webinar suggests, with obtaining a loan and maximizing the amount of money you can get to either start or expand your practice. So I'm going to walk through what we consider to be some key elements of a business plan, things like developing a target market, a staffing model, a marketing plan, some financial projections, which are extremely important, obviously. And then Joe's going to walk through building the right team around you and dive into some of the specifics on what lenders are actually looking for when they're evaluating a startup or an expansion. So let's dive in and review some of the basic benefits of a business plan. So I'm willing to bet that the majority of you didn't get to where you are today without some sort of plan, right? You didn't just randomly wake up one day and decide that you wanted to become a dentist or work in a dental office. You didn't get through years of school without a plan, and you certainly didn't attack, let's say, a full mouth reconstruction without a well thought out business plan. So think of your business plan just like that, like a very well thought out treatment plan for your business. A lot of what is on your screen may seem logical or even basic throughout this presentation, but you'd be surprised at how many clients Joe and I see that come to us that haven't given one second thought of how they're going to actually open their practice or expand it. They know that they just want to, and that's okay. That's what we're here for. So why go through the exercise? Why go through the exercise of building a business plan? Really, like any plan, it provides structure and forces logic and discipline. It helps take the emotion and rash decisioning out of the equation. Obviously, it saves time and money. Just like with any of life's major events, they have significant costs and have the potential to spiral out of control if you're not paying attention. It develops a realistic timeline to keep things on track. Now, in today's world, we all have become accustomed to delays, be that as part of supply chain issues or even in your day-to-day. We're rolling the dice every time we walk into the airport. But at least having some kind of timeline up front forces everyone to be accountable. And lastly, as the title of the webinar suggests, it supports third-party funding. Now, I will say up front that most of the healthcare-specific lenders out there don't always require a business plan with your loan application, but the applicants that do submit them tend to have better results. So put yourself in the bank's position. If you're trying to convince a bank that they should give you $500,000 or more, typically with limited collateral, a business plan helps take what's in your head and translates it to something that a third party can actually understand and buy into. It also shows them that you've actually thought through the plan and you're ready to actually own and run your own business. So we know it's beneficial, but what should be actually included in your plan. So let's look at some of the basic elements of a business plan. Now, though, I should say there's kind of no set rules with this, and a business plan can include all kinds of different things. But typically for dental offices, we see them broken down into 5 or 6 different categories. Kind of think of this as the kind of who, what, where, when, and how of your plan. So I'm going to dive into each one of those sections a bit further in the next few slides. But typically, you're going to have some of the practice basics, right? You're going to have a mission statement and a vision, some sort of demographic or target market research that you've done. You're going to outline kind of who your staff is going to be and what your staffing plan looks like, both now and in the future. And typically contains how you're going to market, obviously an extremely important part of a successful practice today. Unfortunately, long gone are the days of simply being able to kind of hang a shingle and post a sign out front and hope the patients come banging down your door. Lastly, and potentially most importantly, the business plan should contain some sort of cash flow projection and budgeting. So again, we're going to dive into each one of these pieces a little bit further here. So let's do that. So first, the basics. Again, as I mentioned, a lot of this may seem elementary, but it really drives kind of what your practice is all about. You might have it in your head, but a business plan forces you to write it down and actually refine it, making it clear not only to you, but to everyone else and potentially your staff. So let's talk about vision and mission statements, because everybody seems to have one these days. Defining your vision focuses kind of on the desired future state. What do you want to be? A mission statement's very different. It focuses on the now and drives and directs your team on what matters most. So the mission statement kind of articulates a practice's purpose and goals and provides your patients and your staff with kind of a clear understanding of why the heck your practice even exists in the first place, right? And there are entire courses on kind of how to create proper mission statements. But I can give you kind of a few quick tips here as we go through this. What we find is kind of a really good mission statement is patient-centric. And if you follow it and you refer back to it, often guides the practice to kind of focus on what truly counts. It should be clear and focused and built for the long term with longevity in mind. If you do some additional reading on this, the Spear Institute actually offers some good advice. For example, kind of avoid making your statement too broad. For example, something like, let's say, we provide outstanding care to our patients to maintain their oral health. What is outstanding care, and what does that actually mean? Rather, kind of be more direct with your statement. Something like, we strive to help our patients accept the best care possible. So a lot goes into your vision and your mission statement, and it really sets the tone for the rest of your plan and your practice. Again, may seem very basic, but as you're going through it, it's a great starting point. Let's talk a little bit about demographics and establishing a target market. So, to say that this is a critical step is an understatement. Given how competitive dentistry has become, you really need to understand the market that you're considering to open your practice in, right? This goes beyond just a simple kind of Google search or driving around the area that you're considering opening in or expanding to. And one of the most important factors that a demographic study kind of will help you understand is your competition. Are there already offices in the area that you want to open? And are there enough potential patients to support another office? This is often called a patient-to-dentist ratio. It's very simple. And there are lots of rules of thumb out there when it comes to the right ratio of population to dentists. Some people will tell you it's 2,000 to 1. Others will tell you it's 3,000 to 1. But there's a lot more that goes into it than just a number. Obviously, one of those things is the type of location that you're in. Is it an urban area? Is it a rural area? Is it suburban? But also socioeconomic indicators like the kind of education level and different housing variables that are going to have an impact on your practice. You also need to consider what type of patients you want to attract. So this is going to be who you are targeting or your target market. Schein has a regular speaker, Chris Salerno, who spoke at our Thrive Live event this year. And Chris used to be the CEO of Dental Economics. I really like what he had to say about this. He said, treat everyone who walks through the door, but focus on kind of key areas. So your target market will also shape your practice. Are you targeting kind of that busy business person in the city, or kind of the soccer mom and dad in the suburbs? Who you choose is going to dictate a lot about your practice and the types of patients that you're attracting, but also the type of dentistry that you're going to be doing. So completing a demographic report and identifying your target market is critical. That's one of the things that Schein can help you with as you start to expand and or think about starting your practice. But you can't do that without a staff and some operational support. So which brings us to practice staffing and operational support. So this is kind of planning for your staff and how your practice will actually operate. Again, pretty obvious to say that they are kind of the backbone of your business, but it really goes beyond that. Your staff, along with your patients, can become your largest promoters, or what we like to call brand ambassadors of your practice. So your staffing situation is obviously going to look very different day one than it does 2 to 3 years down the road. That's why it's really important to sit down and plan ahead. If for nothing else, because at the time you actually need to bring in another hygienist or assistant or front desk staff, you're likely going to be very busy. And say nothing of the fact that given all the staffing shortages that are out there, it may take you a long time to actually find qualified applicants. So planning ahead through creating your business plan actually helps alleviate a lot of that stress. It also provides you with some clear benchmarks for when you want to actually bring in additional staff. So you've got ample time to do that. So for example, let's say that once you decide that once you get to 500 active patients, you know that you should start bringing in a part-time hygienist. So once you actually hit that 300 mark, you can start planning to actually get to look for where you're going to hire that person from. So again, thinking through these things early and often really helps set the stage for what's to come for your practice. So beyond the team, there are several kind of operational steps. These are certainly not an exhaustive list here on your screen that you need to take into consideration before you open your doors, right? So simple things like what are your hours of operation, but also more important things like what types of insurance plans are you going to be taking, enrolling in those plans, setting your fee schedule, obtaining the necessary tools to help your patients actually pay for the care that you're providing, right? So you're going to be a true fee-for-service practice, or are you going to be insurance-based? Have you set up your payment processing, your merchant services, credit card processing? Do you have options for customers to actually finance their care through options like Care Credit? So again, just going through this exercise of kind of checking all the boxes here helps you set yourself up for long-term success. So real quick recap. So we've gone through kind of some basics. We've defined our mission statement. We've looked at the vision. We've identified a location. We found some staff. Now we actually need to go out and get some patients. So let's take a moment to talk about marketing. Talk about kind of a slide that could be an entire course, right? We could spend the entire evening or several evenings talking about dental practice marketing. We obviously don't have enough time to delve in deeply to the topic, but competition is fierce. We know that. Long gone are the days of just being able to open your doors, have patients come rushing in. You need to actually attract those patients somehow. And developing a marketing plan is kind of the first step to doing that. Typically, we estimate that new practices are going to spend about 10% of their annual revenue on marketing expenses, which could be a fair amount of money. So you want to do that wisely. So some of the best advice we can simply give is going to be able to track your ROI, or your return on investment, for every marketing activity that you incorporate into your practice. If you can't track it, it's difficult to prove if it worked. And there's tons of different ways to actually market your practice. It used to just be that you'd call up Yellow Pages, place an ad, and call it a day. Not anymore, obviously. There are a host of different options out there. There are entire companies that specialize in just dental practice marketing. You can develop your website, you can develop a social media plan. There's search engine optimization, old school local events, and kind of plain old word of mouth. That's obviously not an exhaustive list, but needless to say, dental practice marketing has come a long way, and there are a bunch of different ways to do that. And what you've likely heard is not wrong. Word of mouth referrals are still some of the best form of marketing that you can do. But have you actually kind of sat down and thought through how you're going to facilitate those types of marketing activities? How you're going to facilitate word of mouth referrals? Or are you going to have standard scripting for your employees rather, and proactively ask patients for their referrals? You'd be surprised at how many people don't do that. Will you develop some type of referral bonus for your staff? Will you request online reviews with a tablet when patients are still in the chair? So these are all items that need to be thought through and planned for, which is why the business plan is so important. Again, much more than goes on than just the screen here, but designing your website, it's more than just putting a few posts out there on Facebook and Instagram, sponsoring your local Little League team, and then you're off. A well-defined marketing plan takes careful planning and expertise. So certainly a huge component of a business plan that we feel is a critical component. And lastly, but certainly not least, let's talk a little bit about the numbers. So no business plan would be complete without some sort of projection or cash flow analysis, right? So these are typically pretty scary words for most kind of first-time practice owners. Again, you went to school to learn how to practice dentistry, not how to run a business or be a CFO or a CEO. However, cash flow projections don't actually need to be overly complicated. They just need to be well thought out and realistic, most importantly. So we've developed some easy-to-use templates that walk you through kind of developing those actual cash flow projections. A sample is on the screen now. And walk you through kind of the major expenses that you need to consider, things like payroll and rent and supplies, your lab bill, et cetera. And importantly, how much we typically see new practices spend in these areas. There are several kind of industry standard percentages out there that we can help walk you through to make sure that your business plan and your cash flow projections are realistic. So of all the sections of the business plan that you present to the bank, this is the one that banks are going to look at. Right. So I've reviewed hundreds of business plans as a lender in my career, and I can tell you kind of this is the first page that I typically flip through. The number of cases where these don't make sense is kind of astounding because the numbers that you're creating here are obviously all kind of hypothetical. So what you're reviewing as a lender are these numbers that the applicant has submitted kind of realistic? You're not going to produce $2 million in dentistry your first year, or we typically don't see that. Nor should you project that you're actually going to lose money in the first year. If you do that, how are you going to actually pay back the bank for your loan? So cash flow is still king when it comes to dental practice finance, and most importantly, obtaining that loan. However, as is noted on the slide here, it's not just practice cash flow. That's only one component. Your personal budget and your financial situation is equally as important. So Joe's going to talk a little bit more about kind of your personal budget shortly, but don't shy away from building your cash flow projections. They're arguably the most important part, and it's something that we can certainly help walk you through. So a couple of final thoughts before I pass it off to Joe. One, however sometimes basic it may seem, your business plan is a critical step to kind of ensuring the success and helps validate all of your assumptions. You want to make sure that your plan is fluid. It can change over time. That's why even if you're an established practice, it's important to develop a business plan, even if you haven't had one before. This should be kind of a living, changing document. So breaking down your business plan one step at a time. Again, when you kind of first sit down to start this, it may seem like a very daunting task. It's actually very achievable. Again, with the help of people around you, with the help of some templates that we can provide. You don't need to do this alone. There are a lot of folks and companies out there, Henry Schein being one of them, that can help you develop a great plan and set you up for long-term success, which is a very good lead-in for Joe Paul. who's going to talk to you a bit more specifically about building that team and then dive a little bit deeper into what lenders are actually looking for. So over to you, Joe.
Thanks, Jim. Appreciate it. Good evening, everyone. As Jim mentioned, I'm Joe Paul, one of the financial services managers here at Henry Schein Financial. I cover the Atlantic Coast Zone, been in the industry for about 26 years, specializing in dental finance, and definitely ready to discuss your next steps. As Jim mentioned here, you're only as successful as the team you surround yourself with. In your office and at home, you couldn't do it without your team, whether it be the hygienist, assistants, front desk staff, and of course, your spouse and kids, but hopefully mine did not just hear me say that. It should be the same when it comes to your financial and business side of the practice as well. There are industry-leading experts available to help you educate and guide you in all aspects of a new project, whether it be your first practice or an additional build-out location. These experts include everyone from your dental equipment, technology, and supply companies who can offer services from your initial practice design, layout, project budgeting, timelines, local contacts, and overall guidance from start to finish. Their success is based on your success, so when they're involved from day one, they can provide the guidance based on their experience to help you achieve your goals. If you do happen to be looking at a lease space, there's lease negotiation companies out there, space finding companies out there. They'll all serve as incredible partners that offer knowledge and expertise to make sure all your needs are covered and that you're asking all the right questions up front so that any terms that are not in your best interest can be addressed at that time, not figuring out at a later point. And then, of course, you have your local legal and accounting representatives there to assist with everything from forming a new entity down to structuring that entity to achieve the most tax benefits based on your demographic. By working with a team of people who do this day in and day out, you're not only having to not second guess anything, they're also providing direction to bring you peace of mind that all bases are being covered at day one. Most importantly, your lender partner. There are many lender options out there in the industry, obviously a lot of local banks, a lot of national lenders. However, working with a preferred network of lenders that are healthcare specific will help take a lot of the extra steps off your plate as they're going to specialize directly in your footprint and understand what's needed for growth and approval. Countless times we get calls from people who are completely lost in the middle of a project, wondering why they didn't speak with us first, as it would have prevented many delays in their dreams becoming a reality. And we take pride in the personal approach that we take to make sure each client is taken care of from day one through the life of the practice. We'll dive a little deeper into the advantage of those in just a minute here, but these lenders can offer everything from traditional lending up to 100% of the project, including real estate, if that's something you're considering. Also, we have SBA lender partners that may require some money down, but sometimes those products do make a little bit more sense for your individual project. Clients are paying, in some cases, over $50,000 for consulting fees to do exactly what a team like this can do for you for free. We've helped over thousands of dentists achieve their business goals through our tools here at Henry Schein Financial Services, and obviously would love to do the same for you. Navigating your financial options. So when navigating your financial options, there are really 5 key questions that should come to mind. How much can I afford? What do lenders look for? How do I get pre-qualified and what information is needed? How much should I borrow? And what should you look for from the lender that you choose? Let's kind of dive into each of those individually here. How much can you afford? This is the number one question we receive on a regular basis and really your starting point when planning a new project. Every situation really is unique due to the many variables. When working with the right people, you're able to analyze your financial position up front and maximize your affordability to, again, get approved for the loan needed. Oftentimes, doctors start discussions related to the project details without having their financial needs in order. I always urge my clients to make your financial position your starting point, as nothing's worse than finding your dream location with the perfect space, but not being able to lock it down due to looking at financing a little bit too late into the process, only to come to find out once you do have the approval that that space is no longer available and has gone to someone else. When you're looking for a new home, you always pre-qualify for a mortgage to make sure you have your appropriate budgets in line, so you should do the same when it comes to your business. There are key factors to consider when starting your journey, with the most important being cash flow. Your cash flow is basically your overall review of profits, business debts and liabilities, and then, of course, your personal debt obligations, everything from your home, student loans, automobiles, credit card balances, other revolving debt. All this is factored into your cash flow ratio, showing how much you can afford, taking all these current expenses under review, along with the projected expenses needed to get the new project completed. Future expenses. What are we looking to do in the near future? Are you maybe renting a home currently and you're looking to purchase in the near future? Is your family expanding? I know I have 7-year-old twin boys, and I feel like our food budget seems to increase on a daily basis, and kind of fearful of the days for the college days where they're probably going to need their own freezers. But I am already planning ahead for that. Maybe you're starting a new family or expanding your family now. We all know daycare is crazy expensive enough, not to mention the days when college comes along for those tuitions. By budgeting these expenses into your first and second year projections, it allows you to make for maximum profitability. Your business plan, as Jim touched on earlier, having a business plan in place is not only helping the lender understand how you're planning to ensure the practice's success, but it also gives you a roadmap of the near future, what you're looking to look back on and help keep in line with all of your own goals and making sure that you're measuring your own success to achieve each of those milestones. There are tools available that provide you a step-by-step checklist within our business plan on how to complete everything. So let us know from there. We can get you a consultation set up. What do lenders look for? All lenders are looking for 3 primary items in their consideration of your application for approval. Those are credit, cash flow, and character. So I'll break down each one of these a little bit further so you can be prepared and know your particular position when it comes to each of these categories. Credit is the first thing underwriters are reviewing as part of their screening process. You should really know your credit history, know your scores before beginning the process. So if there are any issues or any discrepancies, you can address them up front and correct them before applying for credit. Your credit report will make or break. It's the first thing they're looking at. So in order to get to step 2, your credit report has to be able to check box 1. There are multiple free sites available offering credit monitoring, so you can easily be familiar with your credit profile at all times. There are 3 credit bureau agencies to consider. Each bank runs them differently. Not everyone's going to pull the same one, but those are Equifax, Experian, and TransUnion. You'd be surprised how different each of these reports can look. Just by pulling these on a monthly basis and monitoring them, you're able to avoid any hard inquiries staying on top of these ahead of time so there's no negative impact to your scores. Every time a lender pulls your credit, if it is a hard inquiry, your score could be affected. So knowing ahead of time if there are any issues there, proactively address them. You're going to eliminate the number of inquiries placed, therefore keeping your score as high as possible. As part of your credit monitoring, you should always be aware of your revolving debt ratios, as credit scores are definitely highly sensitive to your credit utilization ratio. So what does this mean? An easy example would be if you had one credit card with a $20,000 limit. However, you're carrying a balance on that card of about $18,000. You're now showing that you're 90% of your availability being maxed out. Doesn't really look that attractive to an underwriter because you're not managing funds properly. However, if you were to have 2 credit cards with a total availability of $40,000 and that same $18,000 split between the both of them, you're now at a 45% credit utilization rating. So when the banks initially pull your credit report, they're seeing a summary just below your scores. And this is one of the key factors they're going to be looking right at. They want to see your self-discipline to not max out your credit cards and make sure you're monitoring and managing all your financials in that. Even though there's the same amount of debt, it's being balanced between what's available to you and what you're utilizing. So definitely take advantage of having multiple lines of credits and spreading that debt out and paying it off as soon as possible. Another mistake that's commonly made is that people are closing out credit cards that they pay off. They're always thinking, oh, let's just move on. I've paid off the debt. We don't have to worry about it anymore. There's not going to be any negative impact, no temptation to use that credit. However, it's a really bad move. Closing out a credit card is going to reduce your availability that you have to borrow money or take money out in the credit. So that's no longer there to help drive your credit utilization ratios back up again. If you go back to that same scenario we discussed a minute ago, taking 2 credit cards for a total of 40, paying one off and dropping it, you're now credit approval total is only down to $20,000. So you want to keep your debt utilization ratio below 30% if possible and really manage that credit profile overall. Next is your income. A common mistake is the belief that I make a great living, offers a great income, therefore my credit should reflect that. Your income has no impact on your credit score. You can be quite wealthy in a very positive financial position, but with a poor credit history, it will mean nothing, as again, this is the first step in the underwriting review and could hold back your ability to secure funding. Cash flow. The lenders have products in place based on their experience, both nationally and based on your regional areas. So they're able to compare existing client budgets and income versus yours. When it comes to startup requests, that analysis is primarily based on models they developed and their experience based on your area, taking your current situation with your personal income and debt ratios, projected income and expenses for the first 1 or 2 years of the new office, your detailed business plan, and of course, your income and production history, as a baseline for your ability to produce dentistry at a level needed to be profitable. Overall, what can I afford based on these figures? A business plan will not always be required from these lenders, but again, as Jim mentioned, it's a great process to get familiar with, as it shows the underwriters that you've taken all into consideration, put in the time and research and the hard work to determine how you'll be profitable, basically your sales pitch to them. Next is going to be character. Have you disciplined yourself in your spending habits and saving habits? What are your spending habits now, and how do they compare to your earnings? Personal liquidity goes a long way with the lenders and will be a key factor in determining whether or not you're eligible for financing. Your personal liquidity is going to be your true cash on hand, not necessarily investments or long-term assets, but a combination of your checking and savings accounts and what the balances are there and what you've been able to put away there. Each lender does have their own particular process for underwriting. However, they're all going to have liquidity at the top of their list along with your credit profile. You could be coming out of school with hundreds of thousands of dollars in student loan debt and think this is a negative factor in your ability to borrow money. However, when working with healthcare-specific lenders, they're able to take that student loan and view it more as an investment into your future versus a red flag on credit utilization with local lending options. Do you have money set aside for retirement or in the event of an emergency? Being prepared for the future shows the lenders exactly how you'll plan for the success of your practice, and that you won't have to dip into your working capital allowance from them to cover these personal expenses that may come up. So building up that liquid cash is still very important. These are the three key factors that take into consideration for an underwriting review. Everything is in line here where it will be. We almost can guarantee an approval. Most of our lender partners operate at around 90% approval ratings for our clients. So again, these are all tools to kind of get things in line to make sure that you are eligible. How to get pre-qualified. So what are lenders looking for here in order to review everything? Basically, all lenders are going to require the same list of items for review and consideration. Some of them may have a different form they want you to fill out as far as their individual application. However, generally speaking, the list of items required is going to be the same. Your personal financial statement / application is going to break down all of your personal assets and liabilities from that cash on hand liquidity we spoke about a minute ago, any investments, retirement accounts, equity you hold in your real estate, whether that be personal or commercial. The breakdown of your current debts is needed to tie back into the cash flow review we discussed earlier. On average, they like to see 1 year out of school for a record of your production history, a clean personal credit profile, and cash liquidity to cover the next 6 months or so in personal expenses. Again, every deal is going to be reviewed on a case-by-case basis, but this is a general idea of what they're looking for. Your business plan, as I mentioned, not all lenders will require them. However, having this in place with your underwriting review is definitely going to help them to secure the funds in your place. It shows, again, you put in the research and the hard work to determine how you're going to be successful, and they love to see that. Even though they do healthcare finance day in and day out, and they're very familiar that the success is almost inevitable for your practice, they also like to see that you put a plan in place that you can kind of keep track of yourself there. This is essentially your platform to display your dedication to the practice's future, with not only taking your projected income and expenses, but your marketing plans, operations, staffing, demographics, all the items that Jim just went through there. You'd be surprised how much information is readily available to you by requesting one of those demographic reports. They typically cover up to 10 zip codes and give you a ton of information that you would normally pay a lot of money to receive. You should be proud of your plans. Know your future. Know the business plan you have in place. It's really a way to show off your plan's success and, again, keep the underwriters up to speed with everything going on. Lastly, they like to see 2 years of personal tax returns on a startup request, as this shows your year-over-year figures for underwriters to analyze your ability to cover the workflow needed and have the office expanding at appropriate rates. They understand your primary income will be coming from a new practice, but as the new office ramps up, you're typically holding an associate position a few days a week to offset any of your personal expenses and gradually transition into the new office more days as the patient base demands and the production history demands. Established practices are going to be a little bit different because you obviously already have an established cash flow there. You already have your patient base there. When it comes to those offices, the review is a little bit different, but they are still comparing all of your income and expenses. In this case, it's not so much a model-based, but they're basing it also on the review of your peers nationwide and taking that into consideration for your future success. With an established practice, they're going to require a personal financial statement application, a business debt schedule breaking down any open business loans that you currently hold, their current balances due, each of your monthly payment obligations. Again, this all helps factor into the cash flow analysis they'll do. 2 to 3 years of business and personal tax returns. Typically, it's just 2 years. However, if your requested amount exceeds $1 million, they will require a third year just for year-over-year comparisons. And then, of course, they would like to see your current year-to-date profit and loss statement and balance sheet for review as well. With an established practice, I think I already mentioned that we have the cash flow in place there, so that's what they're going to run all the figures on, making sure that the practice is able to afford the new payments needed for the practice expansion. After what we went through with COVID, the healthcare lenders are fully aware of the issues that came up there, and they're looking to see that your practice has bounced back to pre-COVID numbers, but they're fully aware of the success with dental practice. So you're not having to explain to a local bank, helping them focus more on the positives than the negatives during that time frame. Our lenders are going to look at your overall practice position prior to and where it stands today. Again, they're able to take this position based on the review of not only your practice, but the practices of your peers nationwide, so they have a real-time grasp on the healthcare environment. Personal budgets. You really should know your personal position financially for everything professional, obviously, but personal as well. Many times we'll ask clients for details around their finances, and they're completely unaware of the major details that they should be, especially on the personal side. I'll get referred to spouses or office managers, financial advisors, CPAs, which I'm always happy to speak with and help gather the information, but you really should know this information yourself as well, including all your sources of revenue, your fixed costs and expenses, whether it be your house, automobile, utilities, variable expenses for all those miscellaneous items that aren't fixed amounts month to month, and then, of course, contingency funds and plans for emergencies that should pop up. Great news. You're approved for the financing. What are we going to do now? In reviewing proposals from lenders, there are several questions that we should be asking to truly understand the offer on the table. A lot of times I'll offer a side-by-side comparison of any other offer one of our clients have on the table. Our job, again, is to serve as the advisor and consultant for these clients, helping them figure out what's going to be in their best interest long-term and help them find the most competitive finance options out there with the most flexible terms. So if we are able to have another offer on the table from the clients that may be more competitive than something we can find, I'm typically the first one to tell them to take full advantage of it, but we are trained for this day in, day out. This is all we do is compare dental finance options across the board. So whatever we can do to help that decision process a little bit easier, we want to make sure we can take that off your plate for you. Excuse me. What should you be looking for in a lender and an offer? There are a ton of lending options out there, and it really is crucial that you're understanding their complete offer and their product. All too often, doctors make the mistake of whoever has the lowest rate is the best deal. Almost every single time, that is not the case. There are several other factors to take into consideration outside of just the interest rates. Our roles are here to solely look out for your best interest and make sure that you're not being taken advantage of by any other lending sources that isn't the best fit for you. Things that should be questions always when comparing offers for financing. Can you lock in your interest rate? Obviously, things these days are taking a little bit longer, so we want to make sure, can you lock it in? And if so, for how long? Many lenders only offer a short window of time where the rate is locked, and oftentimes that doesn't line up with your project timeline. With the current rate environment, what has it's been this entire year, with the several increases we've had from the Fed that have already happened and the projected increases to come, this should be crucial in your decision-making process. Some lenders offer an option to lock in your rate for a fee, guaranteeing no surprises at closing, as there are lenders that may offer rates in the 3s or 4s currently, but by the time the project is completed, those same rates could be in the 5s or 6s if you don't have them locked in up front. Oftentimes, the banks will charge a fee to lock in the rate, but I can guarantee you that fee is completely irrelevant when it comes to the savings you'll have in this current environment by protecting yourself with any rate increases. Excuse me. I always advise our clients to take full advantage of those options there. Some people want to let it ride, but in some environments, it may be okay. The current environment, please lock your rate as soon as possible on every opportunity you can. Is your rate fixed or variables? Again, with this current rate environment, you'll see a lot of lenders are offering variable rates to help maximize their profits, but it's definitely not in your best interest. You want to make sure that you have control of that monthly payment and that it's set and not fluctuating. as this makes budgeting much more difficult with constant changes in your payments and interest rates. A set payment is crucial to your projections and growth model. Otherwise, all those figures would have to be recalculated on a regular basis, taking time away from your practice and oftentimes resulting in getting your accountants and other teams involved, which then come back with more expenses to you. Are there any loan fees? Overall, healthcare lender fees are lower, while other lending institutions kind of bulk up their fees up front to help offset lower rates. So a lot of times people see maybe a half a point rate than what another lender would offer, and immediately in their mind, it's the better deal. Once you factor in those other fees, they could almost instantly offset that difference in the interest rate, if not over the life of the loan. So definitely something to take into consideration. They also sometimes require money down, where most other lenders that are healthcare specific will offer you 100% financing. They may look more attractive up front, but again, you have to factor into that bottom line of what the total out-of-pocket expense is going to be and take that into consideration. You could have a bank offering like a 4.99% rate at a fee of $500 with another bank offering a rate of, say, 4.49%, but the fees are extremely excessive. Again, this all ties back to whoever has the lowest rate being the better deal, which is obviously not the case. Your financial advisor or someone here from the Henry Schein Financial Services team should always be doing a true apples-to-apples comparison, showing you every bit of the detail. What are other requirements from the lender? Are they going to require that your deposit relationship be transferred to them? If so, do they have local branches near you that are not a huge inconvenience every time you have to look into making a deposit or access your funds? If they don't, do they offer e-banking where you can easily make deposits and withdrawals through there? Do they require ACH payments to be automatically withdrawn from your loan versus you being in control of your cash out monthly and when that payment's going out? Do they require your spouse or someone else to co-sign the loan for you? Healthcare lenders know your business inside and out, and the dental market is their ideal candidate for borrowers. With minimal losses in the dental industry, they're looking to offer products that not only meet your needs, but are also not tie you up for your future, whereas other lenders are looking out for themselves first and not viewing you as a partner for the future and sharing in your success. Here at Henry Schein, we want to partner up with you from day one throughout the life of the practice, so that's why we're able to offer all these additional services and protection of our relationship with you. What terms do they offer? Healthcare lending is typically offered at 100% financing with flexible repayment terms, such as interest-only payments. Maybe they're deferred or graduated payments for the first couple of years, allowing you to focus more on establishing your patient base and get your production growth where you want it to be without the stress of that large monthly payment coming due right away. There are several lenders out there that not only require some sort of money down, but they also expect your full repayment terms to start right away, which ends up with you having to tap into personal funds or pull funds from your working capital allowance to pay back a loan that you needed to borrow the money for initially versus utilizing those funds to cover true operating expenses like your lease payment, marketing setup, maybe salaries for the staff, et cetera. When it comes to the length of the loan, some banks are only offering 5 to 7 year terms, where others are able to take it out to 10 to 15 year terms. Real estate's included, they can even go up to 25-year terms in the real estate portion. Which term fits your individual situation best? Taking longer terms and keeping the payments low while still having the ability to accelerate principal payments give you the most flexibility, control your own terms and interest paid. But it also provides a minimum payment due up front. Should you choose a minimal payment that month if other expenses take priority, it's all about flexibility here. Say your payment's $1,000 a month over a 10-year term, but you have extra cash this month, so you want to make a $2,000 payment. That extra $1,000 may or may not get applied to your future principal, or they may refund it to you, depending if you're not allowed to do that. Some lenders will offer terms that require balloon payments, which means the rate may be attractive and the payment may be attractive up front. However, the loan is actually amortized over a longer term, but they make a large balloon payment due at the end of a 5 or a 7 or a 10-year window. So at that point, it means you're forced to either pay off the loan at that time or refinance it. If you have the funds to pay it off, great. It's normally not the case, especially not in the first 5 years or so. However, having those terms locked in up front for you for the life of the loan is very important, as you don't know if you'll be in the position to pay off at that time. And if you are forced to refinance, are you paying all these new origination fees again? Not to mention taking time to complete other applications and go through an underwriting process. And then lastly, who knows where the rates are going to be at that point? Even though you have a nice attractive rate now locked in for 5 years from now, rates could be double. And then you're forced to refinance at a double rate. Whenever you can lock in your terms for as long as possible, with you having the full flexibility to accelerate principal whenever you'd like to, that's the type of term you want to look for. What is the collateral for the loan? Healthcare lenders, while they do require personal and guarantees like any other lender would, they're doing whatever they can not to tie you up personally like the other lenders would. They would put a first position lien on your practice for a new entity setup because, again, they're financing everything. It's not just collateral based on equipment. They're going to do all your build out, renovations, furniture, interior design, working capital, all your contractor and architect funding. So usually about 50 to 60% of the loans are not collateralized. So they do have to hold that first position lien on the practice and its contents, but they're not requiring that you include any of your personal assets. So you're not tying in your personal residence, investments, properties, personal cash and savings, or any other personal assets that you have. A lot of banks that are not familiar with healthcare are going to try to go after everything they possibly can to make themselves more comfortable and, again, not looking out for your best interest. Your personal guarantees signed only come into play if there is a payment or default issue on the loan, and they have a hard time accessing you to have the business cover it. Then it's when, in fact, your personal side would get involved. In fact, they don't even report the debt to your credit bureaus up front. So you don't have to worry about this business debt dragging down your personal credit scores and, again, affecting your personal debt service and credit utilization. So in future, it could affect your ability to borrow money on a personal level. Who's managing the disbursements of the project? Are you responsible for taking care of everything? It's a lot of work. So ultimately, our lender partners are going to be able to jump on board. You're in complete control. You have to authorize all payments going out. However, you're not having to monitor everything, track everything, and line everything into your budget. The lender that we work with will manage everything with all the vendor partners that you're working with. So it gives you time to focus on the practice while we take care of everything on the financial side. Every extra task that you have to take on is more time away from the operatory and the practice getting completed, which is obviously less money out of your pocket and not in your best interest. This leads me to the overall convenience factor when working with healthcare-specific lenders. This is, again, all they do day in and day out. So between our expertise here and their healthcare expertise in general, we're able to eliminate a lot of the red tape, take away all the hoop jumping. So local lending options, most times you're explaining to them what you're doing, why you're doing, how you're doing it, why you're going to be successful. They're going to put you in the same bucket as a new restaurant opening or maybe a new boutique opening. To them, it's all generally a new small business startup. And then not having the experience needed to properly manage your transaction always comes back to you having to do more. What if your budget changes and do they have flexibility in the overall project? Healthcare lenders understand it. Again, this is all they do day in and day out. So they're going to make sure that you have some flexibility and the ability to adjust. And when you're working with Henry Schein Financial Services and we're involved managing your project, we have other options in case there are last minute expenses that pop up that you did not take into consideration. We can help manage that for you. Final thoughts. So business planning goes beyond just opening your practice. Again, planning out every detail from the day the practice dreams become one down to the days the doors are opening and throughout the life of the practice. Having a business plan in place and working with the right lender partner through Henry Schein will help as a second source review that your practice growth is where it needs to be and you have all the tools in place for success. Even after your business planning up front, our bank partners will monitor the practice, whether it's the production history, income, and overall expenses, and see that you're right in track with the norm so that you have multiple checks and balances ensuring your success overall. Credit rating is very important. Sign up for those monitoring sites, know your score and what position it puts you in to be eligible to qualify for a loan so you can proactively address any of those issues that may arise. Set realistic goals. Plan B is important too. You should always have options in place. I have some doctors coming right out of school looking to purchase land to do ground up construction, only to find out that they're unable to qualify for a project of that magnitude right away. Maybe we set up a lease scenario for them and reduce the budget for the project, but then look to relocate once the lease is up. And at that point, purchase real estate, and you'll know by your patient demand how much larger the space you'll need, so that hopefully that will be your final space and not having to move and relocate again. Get financing in place before signing leases, before looking for locations, before putting deposits down, before committing to any equipment or contractors. Getting financing involved later in the project typically results in delays with your project. So stay ahead of that there as much as possible. Surround yourself with the right team. I can't stress this enough. This will provide a path with much less hurdles, and with appropriate team members and advisors to you, you'll save yourself a ton of time and even more money. A good business plan is a living document and should be monitored and updated regularly. Its checks and balances showing you each milestone is being achieved to make sure your dreams are possible, and will provide you the structure to do just that. Please consider us as part of your dream as well at this point. I'd love to open it up for some questions, and please know if you are interested in developing your business plan further, you're able to reach out here to the team at Henry Schein Financial Services to set up a one-on-one consultation with one of our financial experts here, and we'd be happy to partner up with you to meet all of your business plan and financial needs. At this time, please, any questions?
Thank you so much, Joe and Jim. As a reminder to everyone, if you have any questions, please type into the box labeled "Have a Question," and we'll address them now. So far, I think we'll give everyone about a minute or so to see if there's any questions coming in. Thank you again, Jim and Joe, for tonight's great presentation. If anyone has any outstanding questions or any questions that you might remember after the presentation, please email us at webinars@henryschein.com. As a thank you for attending, everyone will receive the recording of this presentation via email next week. Thank you all for joining us, and we look forward to seeing you on future webinars. Thank you.
Thanks everyone for the time.
Yes, thank you everyone. Have a great night.